Are you watching your living annuities balance dwindle and feeling powerless? Are you worried that if it continues, you might one day find that there's nothing left? Now, that's a fear that no one should have to live with, especially after years or a lifetime of hard work. Hi, I'm Dhevan Naicker, a certified financial planner. And in my career, I've seen far too many people face this exact situation with their living annuities. It's not just unsettling, it's downright terrifying. But what if I told you there are usually only two reasons why your living annuity could be losing money? And better yet, what if I could show you that there are 5 key elements essential for turning things around and actually growing money in your annuity? Now, in this video, I'm going to do exactly that. I'll reveal 2 critical mistakes that can be draining your annuity and walk you through 5 vital strategies to not only protect your investment, but to see it flourish. You see, a living annuity, when it's structured correctly, can be incredibly powerful when it comes to your retirement planning. But if it's mismanaged, it can lead to sleepless nights and unnecessary stress. So whether you're worried about making ends meet or you just want to ensure that your annuity is as effective as it can be, stick around. This information can be the turning point you've been looking for. And remember, it's never too late to change your situation and safeguard your future. So let's get started. Now, the main 2 reasons that I see for individuals losing money in the living annuity, and again, you want to analyze if this has happened to you. The first primary reason that I see is just bad advice. So you might have been in a different profession, not in financial planning, not working with tax or investing, and you approach a financial advisor for assistance or a financial planner. If you do not get the right advice, pardon me, it could lead to you reducing capital. And there are all sorts of reasons for that to happen. We'll go into it just now as I go into the 5 key strategies I want to share with you. But when you get bad advice, this then is one of the main reasons that I feel that you could be running, or individuals run out of money when it comes to the living annuity. Now, remember, financial planning is not a tangible thing. You cannot see it, you cannot touch it, you almost have to experience it. However, there are certain measures that can be put in place even before you invest your money so that you protect yourself. I've given you one of the secrets right there. You want to make sure that you're getting the right advice upfront. The second reason, sometimes you may get the advice, but you're not following it for whatever reason. So even if you are going to get the right advice, so let's say you reach out to me and I provide you with a game plan, you have an idea. If you don't follow that plan, you're not following the advice, you're going to do something outside of what was agreed, that can naturally lead to a stage where you are again running out of capital, right? Because things are not working well. So those are your 2 main reasons that I see living annuities not performing well. But let's go into a bit more detail of the living annuity so that you can understand the working parts to it and exactly what you can do to structure it. Now, I'm going to illustrate this here by drawing for you the components that make up a living annuity, right? And I want to make it or do this in a way where it's easier for you to understand. So I'm going to do a visual representation of it. That's your living annuity capital, right? And this is the first of those key elements, the first of 5 key elements I want you to focus on. Now, essentially, in the beginning, you want to make sure that you're putting the right capital inside here at the start. What do I mean by this? Remember when you were at the stage where you had your pension fund or retirement annuity, or if you are a government employee, when you had money sitting in the approved fund, right? Prior to you getting money into this living annuity, that was your total capital. And you had the option to exercise 1/3 in cash, right? So let's just take one step back. Here's your full pool of capital now, whatever the value is. In my example, let's say your total capital was 6 million, right? This is when you had retired. You would have had an option to take 1/3 of this in cash, and then you invest the balance, which is the 2/3 for income. And that 2/3 is what then moved to the living annuity, right? And I'm saying this with certainty because you're watching this video and I'm assuming that you've got the living annuity. So when I talk about the initial capital, I'm not referring to this 2/3 component. However, right at the beginning, at the initial stages, your foundation step, it needed to have been structured properly so that you had better guidance in how much you needed to withdraw. So maybe you didn't have to withdraw the full 1/3. You could have taken a lower amount. And if you took a lower amount, you would have put more capital into your living annuity, especially if you were taking a higher income. So this is why this becomes the first element I want to talk to you about. It's the capital that you put in. Now, notice, I see this all happening all the times. Individuals who are losing money in the living annuity complain a lot about the fund. but the fund is just one of 5 elements that we're going to look at, right? And it's not even, in my opinion, the most important one. So I want you to see all of the elements that's working together here. The second thing that is one of the elements to focus on, remember, from the living annuity, you are able to draw an income. You're able to draw an income. And the beauty of the living annuity, why I feel that this is one of the most powerful investments, is it allows you a great deal of flexibility. So that income can run on a sliding scale from 2.5% all the way up to 17.5%. So you've got a huge range in which you can adjust your income here. And another massive advantage is you get to change this annually. So every single year, you get to go back in and adjust it, which again shows you the leverage that a living annuity can offer you, especially if it's structured well. So you can reduce your income. When you reduce your income, you reduce your taxes. Again, you may take more income, you're increasing your taxes, but again, you're increasing your cash flow. So you can work with a sliding scale again to choose the living annuity or adjust it to work according to your favor. And that's really, really powerful, because the other annuity options that are available, fixed income annuities, they don't offer this type of flexibility. Now, again, you get to adjust this every single year, but beyond that, you can even choose the frequency of payment, meaning you can choose your income to be paid monthly. It could be paid quarterly, it could be paid annually, or even every 6 months, right? So in which case, you have a greater deal of flexibility now within it. That's the living annuity. I'll walk you through some issues towards the end when it's not structured well. Let's go through the other elements that I want you to pay attention to, right? Next, we want to focus on the fund. So the fund is exactly, or funds, right? Depends where this money is invested. Let me not refer to as fund. Let's refer to this as a return, right? So you're investing your money in a certain place or places, and that's what's bringing you a return. Now, you know the situation with the markets would ebb and flow, again, depending on the type of strategy that you have put in place. So I'm referring to this component right now. Now, markets are unpredictable. We cannot predict what the markets are doing. This is why I believe the fund itself is not your main area of focus on a living annuity, right? You want to control the things that you can control. So you can control the amount of money you put in. You can control your income. You see, you can control that. You can't control the markets, but you want to make sure that the strategy that you're putting in place is geared to growing your capital. What do I mean by that? You want to analyze the bottom, and this is now I'm talking about the fourth element in here, quite an important element. The insurance company is not going to do this for free. They're going to have a fee for structuring your living annuity. And the fee ties in with the return. Both of these go hand in hand. The reason why I'm saying hand in hand is simple. If your living annuity capital is reducing, you naturally are going to question this fee. Why are you paying for something when you're getting less value? You see, it also means if your living annuity capital is reducing, something's not right, possibly with regards to where the money is being invested, which again leads you to question, why are you paying a fee for that place that the money is invested? Now let's turn this around. If your capital starts to decrease, and I see this all the time with the individuals that I'm helping where capital is growing, there's no question about the fee now because the value is there. In order for the capital to grow, it means it's enough to cover the income and it's enough to cover the fees, plus a surplus to ensure that the capital is growing. So in such case, I'm sure yourself as well, you're not really going to question the fee because you know you're getting value from it, you see? So that's the fourth area that I want you to focus on. And then the fifth area, which is a hidden area, we don't get to see this, but you're going to remember this now, it's tax. See, this is your fifth element to focus on. You want to pay attention to this because tax is one of those things that could impact your living annuity. How? Simple. If you're drawing too high in income, then your tax is going to be high. Remember, the structure in which our tax system is laid out is the more you earn, the more you're going to pay in tax. So again, a high income means high tax, but you could reduce your income to pay lower tax. So that's one of the strategies. Again, in the beginning, when you are taking 1/3 out, you can adjust, that 1/3 is taxable. You can adjust your value so you reduce the tax there. And whatever surplus money is being moved into your 2/3 component, that money is tax-free. So it's a very clever way to grow capital. In addition to that, you also want to look at what happens on death. So touch wood, at the time that you close your eyes, this capital can be subject to tax. So you want to start to look at what are your opportunities in order to bring the tax to an absolute minimum. So this is why I say tax planning forms the fifth part in this picture. So recapping, the first area is in terms of capital. Second area is in terms of income. Then you've got return, fee, and then tax. Now, what happens when this doesn't work well? Let's start to have a look at that. Firstly, all 5 areas need to work optimally in order for you to grow capital on the living annuity. If, for example, you don't have the right amount of capital, meaning you pulled out your entire 1/3 and what's left is not enough to support your income, then already you're starting on a back foot, right? Because you've got less capital to provide the income. If you take too high an income, as I shared earlier, it puts you in a position where you're drawing too much from the capital, and this again could reduce in value. If you're not invested in the right place and markets crash, suddenly you may find that your living annuity capital has reduced significantly, but it's still under pressure to pay the same income that you had requested. And likewise, in terms of fee, if the fee is too high, it's again eating out of the capital, which means capital can reduce. And then lastly, from a tax perspective, well, you know this already. If you're paying too much in tax, it's money, your own hard-earned money that could be used for yourself to sustain your lifestyle that's now just being given away. What does it look like when it's all structured well? You want to get to a point where what I call an optimal solution for the living annuity, right? Meaning you want to choose the optimal capital, just the right amount of capital to go in. Not too little capital taken out from your 1/3, because remember, you still want to make sure you have enough to enjoy life, and not too much coming out of the 1/3, because again, it means too little left behind to pay the income. So you want to find the optimal amount. From an income perspective, the same thing. That means a bit of a deep dive on the income, because you want to have a look at the expenses that are going off. And again, when you're sitting with your financial planner, this is something that I particularly enjoy. You want to get down into the nitty-gritty, right? You want to understand what's actually making up the income and look for opportunities where you can finance this in the best possible way, right? So you want to get that income to an optimal level. From an investment perspective, I'll share with you a secret here. You want to analyze the fee of your living annuity. You want to analyze your income, and you're going to add these two together before you start to have a look at where money is being invested. So you don't just go into an investment blindly without understanding it. There's got to be some strategy behind it, some thinking power behind it, in order for you to get the type of experience that you're looking for. Remember, investing is not a gamble. It should never be that way. Financial planning is about planning. It's about putting a system in place in order for you to achieve your goal. And if your goal is to grow capital, then the plan must suit that. Then remember, from your fifth perspective, if you get this thing right, then you're able to keep your taxes to a bare minimum. You're keeping the taxes low here on your income, you're keeping the taxes low on debt, and very importantly, you're keeping the taxes low on your 1/3 element. So if you get the 5 elements structured correctly, this is where you can have lovely growth on capital. And guess what? You reach a stage where you don't really have to check the living annuity, because you're getting the right guidance from your financial planner. You just go ahead and enjoy life. You still get your reviews taking place on a regular basis, but now you don't have this weight over your shoulder worrying whether you can run out of capital. Because if the structure is done correctly, you got the right advice, and you're following that advice that's been given to you, then naturally the results will start to follow. So I hope the video has been helpful. If you're losing money in your living annuity, have a look at the 5 areas of position for you. Which of these 5 areas are you losing money? Sometimes it's more than one, right? So you want to analyze that very carefully. And then you want to seek guidance again. But when it comes to the guidance, remember, this time around, you want to make sure that you're getting the right advice. So make certain that the individual or the planner or the specialist that's helping you with the living annuity understands this really, really well, understands your situation well, and can merge the two so that you end up with a solution that's perfect for you. Great. I hope you found the video very insightful. If you have, post a comment below. I'd like to know from you which area was not working well for you from your living annuity. So post a comment below to let me know. And also, what's your plans to go about fixing it, right? If you've implemented the video, share below and offer in your comments how you've changed your living annuity, because this again could inspire other retirees who are facing challenges with the living annuity. And I shall see you in the next video.